Salesforce stock, ticker symbol CRM, is down nearly 40% year to date. In this video, we will analyze the stock and try to come up with a fair value by calculating an internal rate of return based on the free cash flow of the company. Let's see if it's fairly valued now. Currently, Salesforce is trading at a PE ratio of 284 and a forward PE of 27. If we take a look at the last 8 years, we can see that revenue per share grew strongly in every year. Earnings and free cash flow also had a great development in the past years. This year's earnings went down, but free cash flow growth remained strong. In fact, cash flow grew 30% over the past 10 years and 25% annually over the past 5 years. Earnings grew 350% in the past 10 years, and revenue grew 27% annually over the past 10 years and 26% annually over the past 5 years. So we can see that Salesforce is a high growing company. If we compare the 5-year with the 10-year annual growth rates, we can see that the growth only starts to decrease slightly. Let's also take a look at the company's quarterly earnings report. The company does a great job presenting their figures, and I highly recommend you take a look at their presentations. Although they faced some economic and currency headwinds, this quarter they managed to grow revenue with 22% year over year. But their Q3 guidance hasn't been this good, so the stock dropped after the latest earnings report. But historically, the second and third quarters are quarters with low cash flow. The fourth quarter is the strongest quarter for new businesses and renewals. I also like to see that every revenue segment keeps growing in the double digits. In the past years, we have seen that the number of shares increased steadily. That's mainly because of acquisitions they made in the past. But I believe the dilution to slow down in the future, especially because the company has a high free cash flow and low debt. If we take a look at analyst estimates until 2024, we can see that the revenue growth is expected to slow down. Usually in the beginning of a company, the revenue is growing faster than free cash flow. When the revenue growth starts to slow down, free cash flow starts to grow faster. You can see that analysts also expect this to happen with Salesforce. Before we get into valuation, here on this channel we analyze companies by taking a look at their financials, their latest quarterly results, and try to come up with a fair value based on the free cash flow of the stock. If you want to see regular stock analysis videos, it would mean the world to me if you subscribe to the channel. So now let's get back to valuation and start with our normal case scenario. In this case, cash flow will grow 23%. This is still based on analysts' estimates. In the following years, I will bring the growth rate down. I like being very conservative and decrease the growth rate with every year. We can see the internal rate of return is 16% for our normal case, which is a very nice looking return, especially for a company with recurring revenues and low debt like Salesforce. In the best case scenario, I believe Salesforce will be able to grow a bit faster than in our normal case scenario, and then I will decrease the growth rate a little bit slower over time. This seems like a realistic growth scenario for me. In this case, the calculated internal rate of return is 17%. One thing that is very important when deciding if a stock is a buy or not is the risk and reward of the stock. With Salesforce, the reward is very nice. Let's take a look at the risk. I'm still taking analyst estimates until 2025, but in this case the stock will become a slow grower and stop growing in the double digits over time. We are also using a higher free cash flow yield in this scenario. And you can see we still get a return mainly in line with the market returns, maybe even a little bit above. Which brings us to our combined result. This gives us a potential internal rate of return of 15.6% at the current price. This is no financial advice and you have to do your own research and make your own decisions. But I personally really like Salesforce at the current valuation. I like the risk and reward of the stock. In the best case and normal case, the stock could outperform the stock market dramatically. In the worst case, I still see the stock growing at least with the market. If the stock price drops further, I like the stock even more. What is your opinion of the stock? Do you already own it or do you plan to buy it? If you want to see another stock analysis, check out the pinned comment below and see you in the next one.